Hello, and let's take a look at the macroeconomic indicators driving investments and valuations as it stands in Q1 2025. Let's take a look at the headlines that we saw coming out today and in the recent past. The the thing that's captivated the headlines is Trump's confirmation of tariffs. The markets plunged today largely because of that. Consumer spending has shown to be falling, and US economic growth slowed compared to previous forecasts in Q4. So, what does all of this mean for the outlook for investments and valuations in 2025? The key macroeconomic in this presentation, I'm going to outline the key macroeconomic numbers that we follow closely as they give us signals as to where investment flow and valuations in the tech sector, especially enterprise AI, are going to be driven in the coming months. The factors that we look at that drive what drives investments, money flow, and the expectation of future growth on uh, on the economy and the GDP. What drives GDP? Consumer spending, government spending, and net imports. And you can see the administration is working, impacting the policies, and the uncertainty of the administration's future policies is going to drive those factors. What drives the money flow? The money flow is driven by the interest rates. What drives interest rates? It's the Fed funds rate, and what drives the Fed funds rate is how well the inflation is trending towards 2% and how well the economy is up to a full employment level. And what's full employment? Means everyone who's looking for a job is able to get a job. So in this presentation, we'll dissect these macroeconomic factors that then drive the amount of capital flowing in, that then drive also the kind of valuations that we can expect to receive. Here are the key highlights. The data we got in Feb, most recently last week, Friday, was that the core PCE went down from 2.9 to 2.6%. Now, while at the high level, that sounds very encouraging, when you look through the peel through the onion, it's not much because it's largely because 1 month, January 24 was high. The number continues to remain a little bit concerning, but nothing very alarming. Consumer spending was reported to be moderated. Remember, GDP is the sum of government spending plus consumer spending plus net imports. Consumer spending slowed down, which means GDP slowed down. However, the disposable income was high, which means the savings went up, which means the future investments, which also contribute, the net investments also contribute to the GDP, will be on the positive. Total employment number remains strong. The CPI headline inflation remains a little bit high, but nothing to panic about. Valuations continue to steadily climb in the tech sector, except this recent past with the new administration taking over. There's always a little bit wait and see and uncertainty that comes in. Most of that clears out by March, April onwards. Many of the key policies start taking effect, and there's stability and visibility of what's going to happen. And so I expect that to start smoothing back up again in Q2. And let's take a look at the employment. Overall, the employment numbers look very healthy. For all these factors, and we'll get into detail in the presentation, we see no clear reason that would drive as of today. Now, that could change between now and mid-March when the next Fed funds rate will come out. And the short-term uncertainty is largely being driven by policy uncertainty, and that is going to continue to push out business investments until the dust settles. My name is Sunil Grover, and I'm the managing partner of TrueBlue Partners. At TrueBlue Partners, we are focused on helping entrepreneurs build the next generation of enterprise AI companies by providing them investments, helping them find that initial product market fit, and helping them get subsequent financing so they can continue to fuel the growth. So, to get a sense of how the market is going to look like for subsequent financing, we also look at these macroeconomic factors and indicators that influence future financing. That's what this presentation is largely going to cover.